Ladies and gentlemen, it's happening. Rare earths are back on track. So for me, this looks like the best time ever to take advantage of the investment opportunity offered with the supply chain in EVs, electric vehicles, and the green energy in general. So I'm betting that the best time to get involved is right now, and considering what is happening today and what's already in the pipeline for the next years. So typically lithium stocks, they are the first space in the EV supply chain which are taking off, followed by other critical metals. So the spotlight right now is clearly on lithium and lithium stocks. And this was also the case back in 2012 when the EV revolution began, and which had a bull run in 2015 to 2018. But now it's different, because now the world is really taking off and being very serious about going all green. And the war in Ukraine is accelerating this move very strongly. So look at this chart here. Since last year or the end of 2020, the lithium prices, they have increased tenfold to what Elon Musk calls insane levels. So he recently also tweeted that Tesla might actually have to get into the mining of lithium and also into the refining directly at scale because prices are so high. So a ton of lithium carbonate with a purity of 99.5% costs almost $80,000 US this year. And back in 2012, it was less than $5,000. And this is exactly what is on the horizon, not only for lithium, but also for other critical minerals needed in this EV revolution. That means companies, end users going into the mining space. And it's already happening in the rare earth space as well. And end users are going into mining there, or they are investing directly at exploration and mining companies or processing companies. So even though we are now witnessing only lithium stocks to go up dramatically, the other critical metal stocks might follow very soon, I believe. And at the moment, I prefer stocks in rare earths and critical metals such as niobium, but also graphite. The reasons are simple. Sure, lithium is greatly needed and it's a great place to be as an investor, but with prices already being sky high, I prefer the metals and stocks next in line. And I believe that the fundamentals for rare earths or REEs, they're even hotter than for lithium. So the current lithium supply deficit is forecasted to go back into a surplus by 2025. And this story looks all the more different for REEs, as its supply deficit is expected to widen dramatically over the next years. So many more REE mines in the Western world are needed to go online. So new REE supply is urgently needed, which is, however, not as easy as increasing lithium output. There is a great article from McKinsey here showing that lithium reserves globally, they are massive, and that it shouldn't be much of a problem to increase lithium supply over the next years. And even though this production increase is happening too slow at the moment, and we are currently in a deficit for lithium, the production capacities will be increased substantially in the next years just to meet demand. And they will, most probably, they will be successful in doing this. So in 3 years, by 2025, the lithium supply deficit is expected to go into a surplus again. So my thesis is the following. When investors realize that it's not lithium, but metals such as graphite and especially rare earths that are the most crucial bottleneck for global EV adoption, then I believe that exploration and mining companies such as Commerce Resources, Saville, and Eagle Bay Resources, they are poised to become the go-to place for the creation of shareholder value in the EV supply chain. So I believe the best time to get involved is right now, when stocks are not flying high, but offering attractive buy opportunities. So it's, as we all know, it's buy low and sell high and not the other way around. On the left here, you can see how strong demand for rare earths are expected to grow over the next years. And here it is neodymium, which metal is experiencing the strongest growth as it's being used in EV motors and also in wind turbines as permanent magnets together with iron and boron. And on the right, you can see that the NdPr market is going into a deficit this year. And from 2027 on, this deficit is going to escalate and widen dramatically. So until 2027, that's only 4 years. So that's 4 years left to bring new REE projects into production to meet this strong demand. And with lithium, you don't see such charts because from 2025, as I already mentioned, the lithium market is forecast to go back into the surplus. So this big picture looks all the more different for rare earths because they are the real bottleneck. So if there isn't enough REEs, then there won't be any new EVs or wind turbines. So I believe that soon money that is made from the lithium boom will start to flow into the REE market as investors, they realize that REEs are much hotter fundamentally than lithium. So here we can see a basket of REE prices, which have more than doubled in the last 12 months, as you can see here. And after the strong price increase since April last year, prices were in a correction since February and are now trending higher again. So since 2020, the neodymium price has more than tripled from 300,000 renminbi to more than 1 million at the beginning of 2022. According to this chart. And the same picture we have for praseodymium price, which also has tripled from 400,000 renminbi to 1.2 million. And that's already a very strong bull market in the most important REE prices. But as we know, many REE stocks, they don't seem to be skyrocketing yet. Obviously, because many investors, they're still riding the lithium bull. So I believe that it's time to switch into the next big thing in the EV supply chain, which are rare earths and other critical metals. So look at this chart. The rare earth producer prices in China, they have reached levels that are close to the all-time high from 2011. And do you remember what was going on in the rare earth stock market in 2010? Yes, the REE stocks, they went exponential back then, and the prices were shooting high to really crazy levels, and the bubble burst shortly thereafter. Today, we are not far from these crazy high levels, which what they called it back then. And today, no one is really saying that today's prices are insane or in a bubble. No, I believe those prices are well deserved and might even surpass the 2011 all-time high. So you've probably heard about China's zero COVID policy and locking down their people and also their economy recently. And this, of course, has also affected supply of rare earths to the Western world. And on the right, you can see all the ships waiting to dock because of COVID. Because of the strategy of China with COVID. China has also locked down the rare earth mining and processing hub in the northern region of Inner Mongolia. And this is a very crucial hub for the production of rare earths for China. And that's where also the world's largest REE mine is located, the Bayan Obo mine. And this is having already a dramatic impact on rare earth supply. And prices may go up now even more with this lockdown and the supply crunch that is happening at the very moment. So in late March, China also, they closed the border to Myanmar, which is cutting the Chinese REE capacity by more than 25%, according to this article here. So Myanmar, they account for about half of China's rare earth mineral supply, and China is the world's largest rare earth producer, product exporter, as we know. So shipments from Myanmar, they have been suspended, and this is clearly having an impact on supply and probably also prices going forward. So last week, Jason Mitchell from Mining Technology, he published an article stating in the subheadline, as you can see here, that the Western world must draw up its own strategic plan for rare earths. Otherwise, China will be able to control the price simply by adjusting supply. And that's exactly what we are seeing right now here with the lockdowns and the supply crunch in China. If it's intentional or not, you may decide yourself, but this shows that prices are really poised to accelerate to a new all-time high in the future. And that could be actually the starting shot also for the rare earth stocks to perform. So this article, it also states that the Ukraine crisis has shown just how dangerous it is for the Western economies to become dependent on an autocracy for a mineral resource. In this case, it was, of course, Russia and natural gas. However, demand for REEs, they are expected to grow fivefold until 2030. And here's a great overview by Visual Capitalist showing that it's the rare earths which are facing the greatest supply risk concerning China. And they control not only most of mining supply, but also the refining of rare earths. So, and while Elon Musk is tweeting about Tesla to consider going into the lithium mining space, it's already happening in rare earths. Take a look at this recent headline from Reuters. First of a kind rare earth deal in Europe with EV parts supplier Schaeffler, April 19. So Schaeffler is a German car parts supplier with $1 billion market cap. The company is producing the electric motors for EVs, which of course include rare earths. And these motors are supplied then to the big car manufacturers in Europe. So apparently Schaeffler urgently needs rare earths to ramp up EV motor production. So it's the first time that a car manufacturer, or in this case a supplier in Europe, is doing a deal to secure rare earths supply. And that's actually big news because it shows that this is the way to go forward, I believe. And that's end users doing deals with exploration and mining companies or with processors, as in this case, who then in turn do deals with mining companies. So they are giving money to speed up development of new mines. Now let's take a look into the deal a little bit more. Here there were no quantities or values were disclosed by Schaeffler, so it's unclear how much REEs were ordered. And when you look at the deal, it's no surprise that they didn't mention any numbers. So Schaeffler, they did a deal with REE Tech or RETech from Norway, which company is processing rare earth carbonate concentrates from mines into separated rare earth. So such processing facilities outside of China are very rare right now. And in several countries, however, such processing plants, they are being built right now so that the mined REE concentrates, they can be separated in those facilities. Remember there are like 17 or so rare earth elements in the world, and the mined concentrates from the companies, they typically include many of those 17. So processing needs to extract and separate all those REEs which are wanted or desired by the industry. So that could be easily 2 or 5 or more than 10 elements needed to be extracted by sophisticated hydromet processing facilities, which are of course very expensive. So now let's find out which mine RETech is going to get the rare earths from. So apparently it's Vital Metals and its Nechalacho project in Canada. And according to October 2021 news, RETech and Vital, they have signed a 5-year offtake agreement. Vital will sell to RETech a rare earth carbonate concentrate containing 750 tons of neodymium praseodymium per year. which is contained in 2,000 ton per year total rare earth oxides, or TRIO. So from a 2,000 ton concentrate, they extract 750 tons of NdPr. So 750 tons of NdPr, that's not a lot when you consider that total NdPr demand is currently about 50,000 tons and increasing by almost 50% to 70,000 tons in 2025. So the 750 tons per year represents 75% of vital metals production capacity at its processing plant in Saskatoon, which is expected to start commercial production this year. But it's only going to be at the end of 2023 that the plant is expanded to double the capacity, and that's when RETEC will get 75% of Vital's production capacity. So Vital Metals share price increased tenfold between 2020 and today. They are listed on the ASX in Australia, and they have a market cap of around 250 million Australian dollars. So they are not yet in production. And so with those 750 tons that they are going to produce per year, they will be supplying about 1.5 of current demand, or 1% of demand in 2025. So that's not a lot. So obviously much more supply is needed. And it will happen, in my opinion, because more deals between the industry and mining companies or the processors, they're already being made. And I believe that more of such deals will be made in the future. So this deal between Schaeffler and RETEC, I believe, is just the beginning. It's the first of its kind in Europe. And yeah, it's like an idle deal. So you also need to know that ERMA, that's the European Raw Material Alliance, which is funded by the European Union government, they are sitting on 200 billion euros to speed up the production of critical minerals needed in the next years. Unfortunately, they cannot invest into projects or companies outside of the EU. So they are looking to fund first projects which are located in Europe. So here you can see the first slide of ERMA on their website, and it says that they have released an action plan to secure access to rare earth elements for European industry. So it's happening, ladies and gentlemen. They are ready to spend billions, if not hundreds of billions of euros. For example, a rare earth processing plant is being built right now in Poland to use mined material from the Songwe Hill deposit in Malawi, Africa, from Saville Resources. So ERMA is funding this plant in Poland. The share price of Makango, it has increased also more than tenfold between 2020 and 2021. So let's look at Songwe Hill in Malawi. It's hosting 21 million tons, averaging about 1.4% rare earths in measured and indicated resources, and another 27 million tons inferred at grades of 1.3%. So that's about 50 million tons. So do you remember what Commerce Resources has? Yes, 5 times as much at least. They have about 250 million tons with grades at about 1.8% Rio, which is 40% higher grade than Makango. So Commerce, they have one of the largest REE deposits in the world, and that's more than 100 years of possible supply. And most other projects in the REE space, they are typically only for a decade or 2 at best. So here's also an interesting article from April 28, and it says that alone Europe, they will need 35 times more lithium by 2050, at which time Europe is expected that up to 75% of Europe's demand for those critical energy metals could be met with recycling. So it's interesting to note that REEs, they are very difficult, if not impossible, to recycle, but other metals such as lithium, cobalt, nickel, copper, they are much easier to recycle. So we will need constant supply of REEs. The article, it also states how much metals are needed by 2050 annually per year in Europe alone, such as 4.5 million tons of aluminium, which is 33% more than today, or 1.5 million tons of copper, which is 35% more than today, or 400,000 tons of nickel, which is twice as much as today, or 800,000 tons of lithium, which is 35 times more than today, or here in red, you can see 3,000 tons of neodymium, dysprosium, and praseodymium, which is 700% to 2,600% more than today. And that's really very, very big numbers for the rare earth space. So you see the largest demand increase is with lithium, but it's followed by rare earths. And as we have seen, lithium production capacities, they are expected to be expanded significantly over the next years, and the market will turn into a surplus in 2025, at which time the rare earth market deficit will widen dramatically. So it's all about REEs going forward and securing new supply for the next decades. So what we are seeing today is arguably, I believe, the best fundamental scenario for rare earths and companies such as Commerce, Saville, and Eagle Bay. And I'm very confident that all companies, they offer significant upsides going forward. And it's already happening in the REE space. Deals are being made, processing plants are being built, new supply will be needed, and a lot of new supply is needed. So I'm a shareholder of all these three companies presenting today, as I believe that the future belongs to them and that soon money made from the lithium bull may switch over to the rare earth space. So yeah, now I'm really looking forward to hearing from those companies directly. I think we start with Commerce and Chris Grove. And if you're interested in more information, go to rockstoneresearch.com, where you can find my latest report on Commerce and also the rare earth market. It was in March. I don't know if you can see it right now.
Yeah, we can.
So it was in March. I did my last report on Commerce, and it's on the website. It's about their latest news about producing concentrate samplings for the industry, and it also shows other industry players and the market in general, and it also a lot of charts. So take a look at it, and yeah, Chris, I think you can go now.
Chris, I was planning on introducing you, but obviously Stefan has tried to steal my thunder, and so we'll just let you go ahead, and the clock is running.
Well, thank you very much, David Ian Hodge, president of Zimtu Capital. Of course, a few of you would know that Zimtu Capital created Commerce Resources back in 2001. And this is what Zimtu continues to do today with the final presenter, Eagle Bay. And again, Zimtu provides the opportunity to get in earlier than what most other new companies are created at for the investors. So I strongly advise you to take a look at Eagle Bay and to hear their extremely exciting presentation from Steve Minot and Dr. Neil McCallum. Anyways, but my job here is to present the Ashram rare earth element and fluorspar deposit in Quebec, Canada, and the clock is running. I would like to make a couple of quick points because there are a lot of very lazy journalists out there. And one of the narratives that is absolutely wrong is that somehow rare earth element mining is somehow harmful to the environment. And so in terms of many articles that have been written such that, isn't it ironic that we're looking to rare earth elements to improve the world in this transition over to a lower dependency on fossil fuels, but rare earth element mining is so harmful to the environment. That is only based upon very well documented historical extraction and processing in China. And even China, and I will give them the benefit of improving and shutting down those most egregious polluting projects in China. So that kind of operation is not allowed in China right now and hasn't been for 5 years or so. And that's why one of the dominant sources of supply for China is Myanmar, where they have extremely low environmental standards. So yes, that kind of processing, extraction and processing is done, heap leaching with acid in Myanmar, but the Chinese at least can say to their own populace that they're not doing that kind of extraction in China. So to be very clear, rare earth element mining is not intrinsically more harmful to the environment than the mining of gold or copper or anything like that. Please do not equate historical Chinese extractive methods with anything that would be allowed in the Western world. And specifically, the Canadian National Instrument 43101 is the most demanding and the most stringent mining legislation in the world. And in terms of the Ashram project, this work, this environmental baseline data collection is well underway for us. And overall, rare earth element mines are typically low volume, high value operations with smaller tailings facilities and less tailings. In terms of Stefan, I would like to point out that I've been asked many times in presentations I've done for institutional investors, who's following you? You know, is there any analysts following you? And I say, well, the only one is Stefan Bogner at Rockstone Research. And this is the important point. Stefan understands the rare earth elements better than arguably anybody else writing about the rare earth elements. The first report by Stefan Bogner was in 2013. We did not pay him for that, but he clearly indicated in that in terms of who had the right style of deposit and who didn't. I'm not going to mention the companies that didn't have the right style of deposit, because he focused on us and the ashram, which is the right style of rare earth element deposit, which has the commercial fundamentals, or the fundamentals that historically have allowed one to be a commercial producer. At any rate, in 2014, we established the professional association with Stefan and Rockstone. And since that time, he has written 35 reports on the rare earth elements. So for anyone that wants to understand more about the rare earth elements, I would strongly encourage you to visit Rockstone and read his 35 reports on Commerce Resources and the Ashram project, and on all of the different aspects that are vitally important to understand for the rare earth element sector. In terms of one of those aspects, ultimately, there are only 4 rare earth elements out of over 150 that do exist where commercial operations are successful. And those 4 are dominated by the top 2, bastnasite and monazite. Xenotime is typically where you find a greater concentration of the heavy rare earth elements, but those deposits are extremely rare and arguably challenging in terms of their economics as well. Loperite is the one that is produced in Russia. When you saw the Russian flag in Stefan's presentation, those loperite deposits are on the western coast of Russia in the Kola Peninsula. And those, that material is processed by the dominant rare earth element processor in the European Union, and that is the Canadian company, Neo Performance Materials, with their facilities in Estonia. In terms of the rest of these minerals, and I would suggest that when you look at any rare earth element project, you should find out what their dominant mineral is. And ultimately, these ones here, which there are many companies that have these minerals, but they will ultimately, arguably, have challenge in processing. At the end of this chart here, you see the ion absorption clays, and ultimately those are the ones that are the style of extraction in Myanmar, and which is not currently allowed in the South China ionic clays. And so these ones are challenging because of basically environmental regulations in most countries. Ultimately, as we like to say, all roads lead to monazite, because monazite has more of the rare earth elements that are essential for manufacturing magnets from, especially neodymium and praseodymium, as Stefan so already identified. As we like to say as well, all roads lead to the ashram. The ashram rare earth element fluorspar deposit is the largest monazite dominant defined resource of rare earth elements in North America, and the largest monazite dominant defined resource that is a carbonatite on planet Earth. Yes, you heard me right. That's exactly correct. In terms of the ashram, we are located in Nunavik, which is arguably the best part of Quebec, which is already a fabulous mining jurisdiction. And that is because Nunavik is under what is called the James Bay Northern Quebec Agreement. And this is the most codified, streamlined agreement mechanism for advancing a mineral project. In terms of the ashram, this is what it looks like from the air. This is the outcrop over here, and this is some of the ashram discovery outcrop, a little closer view there. This is the current geological model, which is not the resource model, because this was based upon the 15,000 meters of drilling we did up until 2012, and we have added over 12,000 meters, 99 more holes to this resource, and this new resource will come out in our pre-feasibility study. However, I would like to point out that the ashram is a huge honking blob. It's not a carbonatite that is broken up over a half dozen small showings. No, as Stefan identified, this is 250 million tons in total, and it is one consistent mineralized blob. That is the technical term. At any rate, in terms of Bayan Obo, which is the world's largest producer, the ashram compares extremely favorably to Bayan Obo. We are both carbonatite hosted. We are both monazite dominant with a bastnasite secondary. We do have at the ashram a little xenotime spice, as we like to say, which also improves our heavy rare earth element distribution. And at the bottom bullet point here, you can see that Bayan Obo was 21 to 22% NdPr, and we are 23 to 24% NdPr. And again, these are essential for magnet manufacturing. In terms of our ongoing work, our pilot plant, which is operational right now, is at Hazen Research in Golden, Colorado, about a mile away from the original Coors Brewery. And this is where most of our metallurgical work is ongoing at this point in time. That is Nick Hazen himself standing up on a ladder by one of our column flotation units. In terms of the downstream hydrometallurgical work, this is a list of the work that has been going on in the last year or so. And as it says here, our first samples of commercially marketable mixed rare earth carbonate were produced as we announced them on March 23rd. In terms of right now, we have just produced a larger amount of that rare earth carbonate material, and we are continuing at Hazen to produce larger samples of this material as per industry requests. We're very excited about delivering these samples to the industry, and we certainly look forward to discussions with those potential industry partners after they receive these samples from us. We're also very happy with the letter of intent that we were able to sign between us and the two dominant Inuit corporations, who are the dominant social group in Nunavik. We had our last meeting with them on April 9th, and our project manager, Darren Smith, and myself will be in Kuujjuaq next week for our next meeting with the Makivik and the Nayumavik. As the pre-feasibility study advances, these are all the groups that are working on it for us right now. We're very happy with the progress of this, and ideally, we would have this out before the end of the year, although it might actually be Q1 of next year. To sum up, Dave Hodge, I know my time is running, I'm out of time. But the ashram rare earth element fluorspar deposit is the most attractive type of commercially viable rare earth element deposit in that it is a monazite dominant carbonatite. We have produced high grade mineral concentrates. We have just produced commercially marketable samples of the rare earth carbonate with over 21% NdPr. We're in a great jurisdiction. We have a huge resource. We released a positive PEA a decade ago at rare earth element values that are well less than half of where they are today, and the pre-feasibility study is underway. Thank you very much for the opportunity today.
And thank you, Chris. That was certainly very comprehensive, as you usually are. Now, may I introduce the president of Saville, Mr. Mike Hodge, and he's here in the boardroom to tell you a little bit more about Saville. and this very fancy bridge that obviously Saville owns.
Well, we definitely don't own it, but that's the Mille Viaduct in France. It is only possible because of the niobium alloyed steel. Without it, the bridge would collapse under its own weight. So the niobium potential, this picture here is Sojitz, CBMM, and Toshiba. They signed an agreement to move forward on.
I can't seem to see anything. Hold on. Sorry, guys. One sec here. All right. So we're just having some technical issues here. Just one sec. All right, there we go. If you want to start from there.
Yeah, so this was the viaduct that I was speaking about. So here's the picture of CBMM, Sojitz, and Toshiba, who have been pushing a battery which has niobium cathode and sometimes anode. There's a number of things that these batteries have been doing. We'll get into that a little bit later. Since they signed this agreement, and with the way that the batteries have been going, CBMM put out this article that says they went from selling 100 tons of niobium oxide in 2021 to believing that by 2030, they are going to sell 45,000 tons of niobium oxide. So you can see quite a supply chain coming down the pipe. A few of these batteries have been used commercially with Toshiba. So it's the SCIB, which is an NTO battery. That's niobium titanium oxide battery. One of the first commercial productions that is expected is the Horwin CR6. So it's a motorcycle that will be expected to be in production and commercially available by 2024. It allows for 20,000 charges, and it's only 10 minutes to charge. That's going to get you a range of about 150 kilometers right now, but they continue to develop it and have a number of other applications. There's also a car company that has been producing a supercar, and they were trying to reduce the supercar its weight by 15%. With the niobium alloy chassis, they have been able to get it down 18%. So it's going to, niobium is definitely going to be changing the world for batteries and the EV cars themselves. So with a lithium ion battery, there are a few issues, such as if you try to charge it too quickly, they explode. Not a good thing. So with the niobium cathode and anode, you can charge the batteries way quicker. They have a few batteries that are being developed for EVs that are looking to be charged in about 8 minutes. It also allows for higher output. So it's going to be able to compete with the fossil fuel powered cars, diesel or gas. It also has increased energy storage, and it's a longer lasting battery, so you can have significantly more charges at the safe levels. We're going to get into a little bit of Saville's property. We've got 26 claims, 1,200 hectares, and it is surrounding Commerce's Ashram deposit. So this Ashram deposit, when Commerce came out with their PEA, after a 25-year mine life, they would have taken less than 15% of the deposit. So they have increased their deposit significantly since then. I'm just bringing that up because the green is where the rare earth projected deposit is, and the orange is where the niobium is. So we've got quite a lot of ground to explore. It just doesn't always look like it from a map. Here's some of the results that we, from our initial drill program in 2019, multiple targets that had over 1%. If you're going to compare that to another producer of niobium in Quebec, their average grade would be 0.4, 0.5% niobium. This is what core looks like coming out of these holes. This was core from Mallard, and where the niobium and tantalum is held is in these sort of creamy colored pyrochlores. Sometimes they're large, sometimes they're microscopic. You can't always just visually assay like some materials. This is showing the Mallard area and how it is open in all directions, north, east, south, west, and to depth. We left all these Mallard holes cased. So when we want to make the deposit larger, we can go back to the same drill hole and not have to re-drill next to it. We recently had a drill program. We did some here in Mallard and some here in Marana. These numbers on the side are the boulder train that is running all up just in front of Marana. So the glacier came and pushed everything this way. So we believe that this is where a lot of the high-grade niobium is coming from. In our first drill program in 2021 for Marana, we had 4 drill holes. We put them in slightly different areas to see where we were going to get the highest results. Turns out that in the mag anomaly is where we're getting the highest results. So in our drill program that will be going on this summer, we are going to be able to target some higher niobium, and I am extremely excited for what's to come next. This just shows a little bit of where niobium is found in the cities today and in the future. So it's in your everyday life. You probably just don't know about it. In the future, there's things like smart glass for buildings. Today, structural steels for buildings, bridges. If you've flown in an aircraft, you've come in contact with niobium. E-bikes, cars, it's coming. It's whether or not you're going to be on board. That's it for me.
Well, thanks, Mike. And now I have to tell you a little story just to Chris referred to Neil McCallum as Dr. Neil. And that's because Neil worked in our office for a year or two, and that became his nickname, even though he's not a PhD. And he didn't really care that we called him Dr. Neil, but when we did that in front of other geos, it tended to get a little embarrassing because he wasn't a PhD and the other geos would sort of wonder what's going on. And to cap it all off, his wife is a PhD. Anyways, with that introduction, somebody that's been close to Zimtu for quite some time, and certainly knows his stuff. But first, I'll introduce Steve Minot. He is currently the one that is putting together the Eagle Bay going public strategy. And just say hello, Steve.
Good morning. Thanks, Dave. Good morning, afternoon, and evening to all those that are attending. Is that it, Dave? Am I good to go?
Yep, that's it. Yep, just introduce Neil.
Yes, as Dave touched on, I brought on board with me today our senior geologist with Eagle Bay Resources Corp, Dr. Neil McCallum.
Yep. Hi. Thanks, Steve.
I was just going to go through, put the presentation up, give a brief description of a few different slides, and then I will have Neil jump in and give you guys an explanation on the properties and what we're looking to do as we continue to move forward. Everybody can see that?
Yeah.
All right, as touched on, Eagle Bay Resources Corp, we are a privately held exploration company focusing on exploring and developing, well, there's the CAP property, but over the past few months, I can confidently say Eagle Bay owns 100% of in total over 10,000 hectares up 85 kilometers northeast of Prince George. Moving forward, you know, Eagle Bay is very fortunate to have such a strong team, you know, some familiar faces and have a great Rolodex. And one of the big benefits with Eagle Bay is touched on earlier, Zimtu backing it. The company creation that Zimtu has and the success behind it is a massive standpoint for Eagle Bay as we continue to move forward and go public. Rare earth elements, as you heard, thanks again to Stefan Bogner. The demand that is out there, I mean, everywhere you look, you hear more and more of how much rare earths, and as Mike's presentations touching on niobium, is going to be needed as we continue to move forward. The amount that's being produced, and it's not just electric vehicles. I mean, if everyone could put their hand up of how many have a cell phone right now, I'm sure it's everyone that's on this call. This is just, you know, better and better for Eagle Bay, and probably one of the lowest investments around. I will get into that more at the end of the presentation on the cap structure, but as they keep on putting, you know, these electrical vehicles out, cell phones, that demand, you know, the supply is going to be needed, and Eagle Bay is sitting at a great standpoint. And the amount of claims that we do have, and carbonatite claims, which strategically 80% have produced rare earth elements. And my mindset was, you know, the more property that we have, the more that we're going to be able to do exploration discovery and be a part of the electric vehicle market and all this rare earth and niobium moving forward. The demand shock, you know, there's some, it's not just me that's talking about, there's many big players that are involved moving forward. You already saw this chart thanks to Stefan Bogner, and just everything here is benefiting a company like Eagle Bay as we continue to move forward to a public listing. Moving on, you know, well, everyone's seen this guy around, and with the electrical vehicle market, how can you not have this guy? But I'm one in the mindset that I'm not one I want to watch things happen. I want to be a part of it. And Eagle Bay, I feel, is definitely solidified and jumped right in the middle of this market as we continue to move forward. The shareholders, Zimtu, everyone that's behind it, we have certainly put ourselves in a great position to be a success as we go to the public market. As mentioned at the start of this presentation, Dr. Neil McCallum, you've heard his name. We will now have him jump forward and give an explanation on the property. I know he's very encouraged and excited on this property we have, the amount of claims. So Neil, please take it away, and just some explanations on the property and where you see us going this summer.
Yeah, great. Thanks, Steve. I think it's important to point out part of the background of this project is that really I think we have just scratched the surface on the potential of it. As it was first looked at when rare earths, as Stephen pointed out, really exploded in 2010 and 11, and we didn't get all that much work done at the time when I was involved back then, but now is the right time to be looking at this project again, as I think we have a really good baseline of information to target for future exploration programs. We not only have the rare earths, but niobium, as Mike pointed out, is an important component for the battery metal and new technologies coming forward. So we have done a little bit of work at this end of the program that's shown on the map here with rare earths. But yeah, if you want to scroll down, Steve, we've expanded the project all the way from the very beginnings down at the southeast part. There's a magnetic anomaly that we started on that looks very similar to the very strong magnetic anomaly that overlies the Wichita carbonatite project. That project is in purple there. It's owned by Defense Metals. And if you've been following along with them, it's been really exciting to see what they've been doing. The latest result from one of their holes in their definition drilling is 3.09% total rare earths over 251 meters. So that's excellent results. And I think that we can see some similar structures all along the property, all the way down to that magnetic anomaly at the other end. So having that strike length of, it's got to be about 20 kilometers, holds a lot of potential for the project. So we've spent the last few years, amalgamating the project, and I think that we'll be able to execute this summer on a really impactful exploration program to outline some new zones, but also expand the zones that have been defined previously. One of the better results from the previous operator, right beside Defense Metals, is that drill hole 10-006 with 1.43% total rare earth over 37 meters. So it's not the same scale as the neighboring deposit, but it's definitely getting us on the right point. And I think that there's, from what I can see in the database, a lot of untested targets that we can test along strike, and targets that haven't even been tested yet by drilling. So I'm really excited to see what happens on this project. And that's about it for me, Steve.
Great. Thanks. Thanks very much, Neil. Very much appreciated. As he touched on, our road ahead for 2022 coming sooner than later. We have actually confirmed down a site visit, which is very encouraging at the end of this month with Neil, and get some sampling there. And then just touching on it as well as he, with Defense there, their results are very, very encouraging for us. One of their results, I believe a month ago, even showed about 6% of Trio. These results that they're putting out, I mean, there's only one other that is around in a public listed company, which is Mountain Pass, and they're trading at $40 a share. So, to close this out with Eagle Bay and its financing, we're sitting at 7.5 cents. As of last night confirmed, there's 131 shareholders. We are very close to pushing through to a public listing. I encourage you, yes, private, high risk, high reward, but this is not just a single company moving forward. We have Zimtu backing it. We have shareholders in place. We have money in the bank, and the electric vehicle market speaks for itself right now. So here we are, as I said, right in the middle, and a great position. And timing is everything in this company, or just everything in this market. And when we come public, there's going to be a lot of very exciting and encouraging things happening, and one of the lowest investments around, as I touched on. So thanks very much for your time today. Thanks to Dave, thanks to Zimtu, Mike, and Chris. Always a pleasure with these presentations. Stefan Bogner, thanks very much, and I look forward to seeing you guys very soon.
Now at this point, we do have a few questions coming through on the text chat thing. I'll turn the meeting over to Colton. He's our digital expert, and Zimtu brought him on at the beginning of COVID because we were losing all of our in-person things. So we hired Colton, stole him away from the provincial government with, standard sort of capitalistic convincing pieces to the story. Anyway, he'll handle the question and answer period. And I would like to point out that at any time, if you have any questions on any of the companies that are connected to Zimtu, or for that matter, any company at all, we'll comment. But you can always email us, phone us. We're happy to talk to shareholders at any time. Colton?
Sure, great. Just thank you guys for those presentations. Those are fantastic, especially you, Stefan. Great presentation. So the question we have in from Helmut Krebs, thanks for writing in. So now that we have heard the demand for all these materials will increase in the next few years and that the 3 companies presented have great areas, when will they produce or when will they actually earn money? And I know this question gets asked all the time. Chris, you could probably answer this quite well, as Commerce is probably the most advanced out of the 3.
Sure. Thanks very much, Colton. In terms of answering that question, and we, under the Zimtu philosophy set by David Hodge, we believe that the more the investor knows, the better they're able to make wise decisions. Ultimately, when a company has finished a pre-feasibility study, only then can you start the next stage, which is typically the work on the bankable feasibility study as required by the Canadian 43-101 legislation, before you can apply for a mining permit. In our case, we hope to have the pre-fees out by the end of this year. And then what we would need to start is the 18-month process to then get the Environmental and Social Impact Assessment Certificate, or the ESIA. That the data collection for that takes approximately 18 months. In that 18-month period, let's say it starts on January 1st, 2023, then we would be looking to submit that data in June of 2024, and at the same time file a bankable feasibility study and an application for a mining permit. Following that, if we're successful in getting the ESIA certificate and the mining permit, arguably we would be able to be in production within approximately 2 years. So you're essentially looking at about 4 years from now to get into production. So in terms of where we are now, although I would say this is potentially the most dynamic times for us. I mean, the share price is not going to go to the moon on the ribbon cutting ceremony in, June of 2026. The dynamic time is now, where we have already proven up positive economics, and we're looking, or we have been approached by many industry potential partners. And so I am very excited about developments over the next quarter.
If I could just sort of add to that, certainly the most opportune time to invest in any junior exploration company is long before they ever go into production. The opportunity to make money, to trade the stock, is really long before the production decision. In fact, generally speaking, mining stocks go up on discovery, on blue sky, and when it actually comes to the mining part, they often come down a little bit in order that the big mining companies can get their piece of the action. So the opportunity for you people, as Stefan said, as Chris said, is now.
Thanks for watching the video. Make sure to like, comment, and subscribe so that you don't miss another update.